guys, welcome back. We're gonna do a quick bonus video. All right, this is a bonus video. See the stuff behind us. I'm not gonna necessarily talk about that right now. Let's talk about what if let's say someone is working Lyft and you're doing Uber, right? And then you also got another side hustle that you're handling. Now Lyft and Uber, they are counting the amount of money that you're making, and they're gonna send you a W-2 or whatever, W-9 in the mail so you can file your taxes. Well, let's say that this third hustle, the side hustle that you have, maybe they're paying you under the table. So here's something that's important to know. First off, the IRS goes off of what is reported, okay? The IRS goes off of what is reported. Now, one, I'm not an accountant, I'm not a CPA, I'm not telling you not to report stuff, but I'm gonna be honest, the IRS goes off of what is reported. And I think we should have a video about how the IRS began and it'll kind of make more sense, all right? So they go off of what's reported. So let's say you get $500 a month in cash from your other business, all right? Maybe you're a property manager, for example. Well, what you should do is you can go online and research or look for on Google. Look on Google for create tax stubs, or not tax stub, create W-2 stubs, or create paycheck stubs, okay? When you go to that site, and we may even have a site in the bottom for you guys to look up, and you'll make a pay stub. As you make a pay stub, it's gonna ask you questions such as, how many dependents do you have? What state do you live in? What's your age? Et cetera, et cetera, et cetera. Do you get paid weekly, bi-weekly, monthly, whatever it is? Enter that information in, and it's gonna automatically calculate how much money or tax withholdings that you should have per check. So whether it's monthly, quarterly, weekly, whatever that pay schedule is for you. What you could do, if you want to become a business owner, is you could hold that money, and you can pay it to Uncle Sam immediately. I know some people who just pay to Uncle Sam, that way they don't have any liabilities and not worried. What you know what you can do too, to be creative, you could also go online, go to the IRS website and create an EIN number. Don't be afraid to get an EIN number, guys. Because when you get an EIN number, you go from here, who has the highest tax liability, to the lower tax liability, which is a small business owner, okay? EIN number. And believe it or not, EIN number or 1099, which normally Lyft or whoever will send you, you're considered a small business owner. You're considered a contracted employee. You're not a full employee. You don't have the medical benefits of a full-time employee. So therefore, you're really a contractor. Okay. Well, the EIN number will basically give a separate social for the business, for the small business. So instead of being taxed here, you'll be taxed here for that income. All right. Hope that makes sense. So you can take that money and you can actually invest it into that company, that business, and now becomes equity, all right? You can now invest that into your business. Now, for that first year or so, something that's very wise to do would be to conduct business as though it is a business. Whether that is marketing, sales, networking, et cetera, et cetera. At the end of the year, you want to keep track of all of your activity. And there are 3 programs to use. One that I personally use, my wife and I use this for our real estate and for our rentals. It's called Wave Apps, and we'll have a little tag for you at the bottom. Wave Apps, okay? Wave Apps will allow you to download. It will download on your phone, take a picture of a receipt. It puts it into accounting software. You log in. It's free. You log in. You categorize it. It will pull up your financial statements, your balance sheet, and tons of other things. That way, when you file your taxes the following year, you can show track, right? Once again, the IRS goes off of what's track, what you report. So you can show via your report, your financial statements, what you did with that money, all right? Because if not, you're gonna end up having a higher liability. Now, what happened from a politics standpoint, what happened within the last 10 years is that the politics forced the big business owners to to take on the liability or the burden of carrying medical insurance for all employees. So what you saw happening was that majority of the big businesses went ahead and pushed that liability on the employees by making them sole proprietors or by small business owners, EIN, also known as contractors, okay? Contractors, 1099 employees. That way the bigger businesses didn't have to pay the insurance, the medical insurance, all right? Hope that makes sense. Thank you guys so much. Like I said, this is just a side video and question and answering. If you guys have any more questions, please reach out. Look forward to talking to you guys soon. Peace.